In this lesson, I'm going to introduce you to the concept of swing trading. Swing trading is extremely important, and it's something that you should seriously consider. I know everybody in this industry tends to focus more on day trading because day trading tends to provide a larger return, but it's not always the case. Swing trading can make more sense for you, especially specifically if you're working a 9-to-5 job. If you're an entrepreneur running a business, if you're a student and if you cannot dedicate enough time to the charts, or simply if you cannot dedicate full-time attention to the charts, swing trading might be a better option for you. It's more long-term, right? Whereas day trading is short-term, as we already talked about in previous lessons. So I hope at this point you kind of figured out your trader personality and you can decide whether you're a day trader or a swing trader. But in this lesson, I'm going to show you multiple examples from a swing trading point of view, and it's the same strategies, really. It's the same strategies, the ABO, the IBO, the CBO, the ACB, and they're just playing out on the higher time frames, right? So at this point, you know what the hybrid approach is. The hybrid approach is applying the strategies to the higher time frames. It's looking for an ABO on a monthly, weekly, daily, or an IBO or a CBO on a monthly, weekly, daily chart, right? The thing is, with a hybrid approach, you go farther down and actually continue focusing on the 4-hour and the 1-hour and the 5-minute to execute those strategies, right? Swing trading is the hybrid approach, right? You can execute swing trades as with the hybrid approach if you wish. Right, but that's what we're focusing on here. With swing trading, we're really focusing on the larger picture. Our main focus is the larger picture. And because of that, it doesn't take up that much time, really. You know, at the beginning of every single week, on a Sunday or a Monday or a Saturday or a Friday, you know, when the previous week finishes and before the new week begins, you make your swing watch list. You make your long-term watch list at that point in time, and you actually figure out from a larger time frame point of view, where are the best opportunities? Which currencies, which stocks, which cryptocurrencies will be offering the best opportunities for this week or even the month, you know? So, and once you do that, at that point, you just wait. You wait a few days, maybe you wait a week, and you can place alerts so that if when price action actually pulls back to reject the 1-hour 50 EMA to reject the daily 50 EMA or the weekly 50 EMA, you can place an alert at that level so that it notifies you when it actually happens. So that's kind of how you approach swing trading from a higher time frame point of view. And I strongly encourage all of you here to actually consider swing trading, right? Swing trading is, like I said, you're mainly focusing on the higher time frame patterns. So with that said, that's just a little brief introduction. Let me jump on the charts, show you some examples so you can actually understand it a little bit deeper. So like I said before, swing trading is kind of like the hybrid approach. You're mainly applying the strategies to the higher time frames and looking for long-term opportunities that will last anywhere from a week to a month, maybe even 3 months, and maybe even a year if you want to hold them that long. You know, so that is what swing trading is. And because these opportunities take weeks to develop, right? Sometimes they even take weeks for you to execute them before they pull back for an actual entry. That is why swing trading is part-time trading, right? And the thing is, if your account size is large enough, swing trading part-time can actually give you a full-time income because you can still make a really good return from swing trading. So if we look at the charts here, I'm going to show you an example that we already looked at. We looked at many swing trading examples throughout this masterclass multiple times, and a lot of them were executed as holy grails as an example, but we talked about many swing opportunities within the multi-time frame analysis lessons, the Elliott wave theory lessons, and so on. One example that we already referenced multiple times was this one, right? It probably looks familiar. If you look at the monthly chart here, we have beautiful resistance on a monthly chart going all the way back to 1986, right? One rejection, second, third, fourth, fifth, sixth, and seventh, right? What was once support became resistance. And then you can see price action started rejecting this level. On a weekly chart, we started to develop a double top, also rejecting that area. And then on a daily time frame, we had an advanced breakout to the downside. So this is a swing trade that you could have literally held as an advanced breakout to the weekly 50 EMA, right, as a swing opportunity. Or if you wanted to push it further and hold it for a few years, obviously you could have targeted that monthly run and held it all the way down to the previous lows, right? So that's a very popular swing opportunity here, right? And we already covered this one in the Holy Grail lesson, but that is a swing trade. And you can see that this took a while to develop for price action to pull back, reject this level, decelerate on a daily time frame, and present the advanced breakout opportunity to the downside. This took a few months to actually present that entry. But then when it presented that entry, it fell massively, playing out beautifully to that weekly 50 EMA as an advanced breakout. You've got to remember, an advanced breakout on a lower time frame, you're targeting the 4-hour 50, which is the middle time frame between the daily and the 1 hour. Because as a day trader, your main focus is daily, 4-hour, 1 hour. However, with a swing trade, it's the same concept. The middle time frame is the weekly chart. So if you're taking an advanced breakout, a pattern breakout on a daily chart, the level that you're targeting typically is the weekly 50 EMA, right? Unless you want to push it farther because there's something epic on the monthly chart. So that's swing trading, right? So that's one example that we already looked at. Another example would be right here. And if you now see price action fell on a monthly chart to those previous lows, right? Now we don't have much support in this area. If we zoom out, price never traded at this level except once here during a market crash or recession. So now we're actually rejecting this area, forming a double bottom, okay? The weekly chart has multiple rejections, 1, 2, 3, and this would have been the fourth. And then if you look at the daily time frame and we make this larger, if we actually zoom in on this daily chart, you'll notice that in that area we had a double bottom with a massive bullish low test reversal. So what is this? This is another advanced breakout. You can see that this has already been well into this bearish trend, right? Finishing its wave 5. Massive low test off of monthly and weekly levels, really good support level as you can see on the weekly chart, and then a beautiful bullish low test. So you could have taken this as an advanced breakout to the upside and held it to the weekly 50 EMA, right? Or took profit short earlier by utilizing long-term management, right? Long-term management, which is trailing that 4-hour 50 EMA. You can also do that with swing trading. So as a swing trader, you might prefer to utilize long-term management rather than short-term management. But that's another example, right? It's an advanced breakout on a higher time frame. Now, after that, what happens after an advanced breakout? If you look at the daily chart here, obviously we have a breakout, higher high, previous high, higher high, right? So we already have a trend change. At this point, the monthly chart already rejected the double bottom levels. The weekly chart formed a beautiful low test reversal and price action exploded to the upside, giving us a trend change. You know, what was once a bearish trend now became a bullish trend with this breakout. So what are we looking for now? An IBO. And this would have been an IBOA. Simply price never kind of rejected this daily 50 EMA, but you can see it started to fall and it started to decelerate immediately, right? Now, in this case, you can see it rejected the weekly 20 EMA a little bit, so that's why it fell a little bit farther down because there was some serious weekly momentum. But eventually it started to decelerate, rejected 0.618 Fibonacci, and exploded massively to the upside. You know, so once it started to break the phase line, as an example, this could have been a trade that was executed. And since it's an IBO, what is the best target for an IBO? We have two: weekly 50 EMA again, or 1.272 Fibonacci extension. Why? Because you're targeting wave 3, and wave 3 target, one of the best targets is 1.272. So with that said, looking at the chart here, we have this beautiful breakout. Price exploded massively. It hit that weekly 50 EMA with a ton of momentum. Check it out, right? There was just a massive bullish engulfing up to that weekly 50, so it just broke right through it and continued all the way up to 1.272, right? So that's an IBOA on the higher time frames. Actually, it's an IBOB on a higher time frame simply because we don't have a trend change on that 4-hour chart, but it's a beautiful, the weekly chart. I always tend to focus on the lower time frames. But yeah, it didn't have a trend change on the weekly time frame. but a beautiful trend change on a daily chart. So beautiful IBOB, and again, potential target would have been the weekly 50 or 1.272. Now, check it out now. At this point, it clearly broke the weekly trend line. And if you can look at the monthly time frame, we have a beautiful double bottom, massive rejection with a strong acceleration to the upside. And it's also breaking out of this monthly trend line, which you can see here on a weekly time frame as well. So what is this now? If you think about the strategies, this is, let me remove this, make it a little bit cleaner. This is now a CBO on a higher time frames. Perfect CBO, really. So at this point, you can draw your Fibonacci retracement. You can wait for price action to pull back to roughly 0.32 Fibonacci, which lines up perfectly with the weekly 50 EMA and that descending trend line, right? And by the time it pulls back, chances are the daily 50 EMA will catch up. So this can be another swing entry targeting what? Now the monthly 50 EMA. Or simply you can also take profit at the previous highs, right? But what you can also do is obviously draw in your Fibonacci extension, and let's see what that would roughly present us. So here we have Fibonacci extension. So at this point you can target, this would be kind of like a wave 4 pullback. So wave 5 targets, what are the best targets for wave 5? Previous highs and 0.618 Fibonacci extension, right? So if you look at this, you can obviously target the previous high if it actually presents this beautiful entry here and it decelerates and so on. Or you can target 0.618 Fibonacci extension, which would also line up just below the monthly 50 EMA. Or you can even push it to the monthly 50 EMA and the previous highs. So that's swing trading. That is what swing trading looks like. It's just applying the same patterns as a day trader would, but you're applying them to the higher time frames. And you're focusing strictly on those higher time frames. Now, from an entry point of view, obviously you can enter the same way as well, right? So entry somewhere around 0.3 to Fibonacci. Your target would have been 500 pips in this case, roughly at 0.618. Your stop loss, this is a CBO, so your stop loss can be at 0.618. And you're making a 2.5% return. You catch a few trades like that, you make a really good yearly return. Now, obviously, it's not the return that a day trader would make, but this is, if you really want to be very hands-off, right, then you can really apply the strategies the exact same way, with stops the exact same position as an IBO or an ABO or a CBO. We already learned the strategies. So just take them and apply them to the higher time frames. Or utilize the hybrid approach, right? And you will make a much larger return, but it obviously involves a little bit more time, because at that point, let's say this pulls back, right? As a swing trader, you can just place an entry already. You can just place that in order, and once price action hits this 0.32, the weekly 50 EMA, the trend line, by that time, the daily 50 EMA, once it hits it, you will be live, and then you have your target and you have your stop loss. Very hands-off. You can do this at the beginning of the week, right? Or you can simply place an alert, wait for price action to decelerate, slow down, and then execute with the hybrid approach, where you wait for a day trading entry, right? And you take the trade to the upside, utilizing long-term management, right? Where you're kind of trailing that 4-hour 50 EMA, letting price action play out. Now that's obviously, once the entry is live, at that point, it takes a little bit more time, right? Or as price action is approaching, right here, if you look at the daily chart, as price action is approaching and it hits your alert, at that point, you would have to be a little bit more active. But before that happens, you don't have to do anything. You just plan your position, place an alert, and you chill, you wait, And then once price action actually hits your alert, hits your entry level, at that point you can wait and wait and wait until it presents one of the strategies on the lower time frame. And then you execute with the hybrid approach and make a significantly higher return, right? And at that point you would have to be a little bit more active because of the entry, simply until you get into the position, right? So that's one example. Let me show you another example here. Well, actually I showed you multiple examples of how swing trading looks like, and you can see beautifully here on these higher time frames that this is an exact replication of all the strategies. We had an ABO, we had two ABOs, an IBO, and now potentially a CBO, right? So if we look at another example here, there we go, charts have loaded. Check it out right here, right? We have a CBO that occurred on the higher time frames again, right? Now in this case, the monthly chart was a little bit more discretionary, but I mean, if you look at it, it rejected the support area with a double bottom, started to explode to the upside, broke a little phase line, right? And gave us some bullish momentum, breaking above that monthly 50 EMA. As that happened, check it out, as that happened on the daily time frame, we had a clear breakout out of that pattern, right? Break of the trend line, and we came to reject 0.32 Fibonacci, the trend line, the daily 50 EMA. And look, double bottom on a weekly, perfect pattern breakout, and this is a CBO. This is simply a CBO. We have a full breakout, a break of the monthly 50 EMA, a break of the pattern on the weekly chart after a double bottom. So this is like a descending triangle breakout and a retest, and a beautiful rejection here on the daily time frame. So breakout, retest. We have the daily 50, we have the trend line on the monthly, weekly, daily, we have the weekly 20 and 50 EMA, we have the monthly 50 EMA, all acting as support. And at this point, you can obviously execute the trade with, again, an order if you wanted to. Now this would be a wave 5 run and stop at 0.618. And again, you just made 2.27%. Or simply the same approach as I mentioned, you can wait, you can just place an alert, you can wait for price action to pull back. And once it does, at that point, you can wait for the hybrid approach, where you just wait for a day trading entry, an entry on a lower time frame, you execute, make a much larger return. But at that point, again, it takes a little bit more time versus if you will look at the chart again, versus this, just placing an entry, and in a span of 1, 2, 3, 4, 5 days, 1 week, see, this lasted 1 week, you made 2.27%. If you're trading a $100,000 account, that's $2,200 in a week. Beautiful, right? So that's what swing trading is. Part-time trading. It does not take as much time as day trading. That's the thing. You literally make your watch list at the beginning of the week. You plan your positions, you place alerts, you wait and wait and wait until the entry presents itself. And then you execute and you let it play out, period. You know, let me show you another example. So if we look at the chart, and here we have similar kind of thing, you know, so we have beautiful support on a monthly chart, multiple rejections. You know, now I haven't been using Fibonacci MACD divergence, but chances are there's MACD on every single position here, so you can use that as a beginner. And once you get a little bit more advanced, you can just read price action. But again, we have beautiful support on a monthly chart. We have a rejection of the support with a bullish engulfing. If you look at the weekly time frame, again, beautiful rejection of support, acceleration to the upside. If you look at the daily time frame, what do we have? Kind of a higher low, a breakout. Now, again, it did not perfectly reject that daily 50 EMA, but it fell back down, started to decelerate, broke a phase line, exploded massively to the upside, hit that weekly 50 EMA, and continued a little bit farther to resistance. Same type of pattern. This will be, again, an IBOB, right? IBOB playing out on the higher time frames. Now, if you decided to place an entry order, obviously you would have taken the position. If you targeted the weekly 50 EMA, stop loss 0.75, and boom, you just made 1.67%. Easy, you know. Now, again, you could have also waited for a hybrid entry to present itself with the hybrid approach, you know, which is just waiting for the day trade on a lower time frame and executing it with long-term management and so on, right? Now, one more thing. We go back to the charts, check it out. Here's some positions playing out right now potentially. So again, you look at the monthly chart, we have beautiful support in this area, you know, bullish engulfing on a monthly time frame. So good rejection. On a weekly time frame, we have this double bottom off of support, massive kind of rejection with a tweezer bottom and a bullish engulfing. That's an epic rejection here on a weekly chart. So what could we target? I mean, weekly 0.32 Fib, weekly 50 EMA, this general region, right? And if you look at the daily chart now, there was this kind of messy advanced breakout, Now it broke fully. It broke out of the pattern. The bearish trend has now concluded. We hit support. We rejected that support. And now you can just simply wait for a higher low to develop, which will be an IBO setup. And then again, you can execute all the way up to 0.3 to Fibonacci, right? And I think I have one more to kind of showcase. Here we go, right? So if you look at the monthly time frame, check it out. Trend line, multiple rejections. Price action started rejecting this level. If you go farther to the weekly chart, you can notice that on a weekly time frame, we also broke the trend line, formed a little inverse head and shoulder pattern, left shoulder, head, right shoulder. I mean, we have support in this area in general, right? This general region. So beautiful support, left shoulder, head, right shoulder, break of the trend line, break of the weekly 50 EMA. And if you look at the daily time frame, same thing. Beautiful support, multiple rejections, left shoulder, head, right shoulder, beautiful trend line. We have a break of that trend line giving us a higher high, trend change, and now we're in a pullback to reject 0.32, daily 50 EMA, weekly 50 EMA region. Now, in this case, you can see the weekly chart has a big bearish engulfing, so it might make sense, instead of placing an actual entry right now, right, to actually wait for deceleration. Wait for price action to slow down, decelerate, reject these levels, which is, we also have horizontal support here. Beautiful. So you can wait for price action to reject them. And once there's a rejection, you can execute with a live swing entry, right? So, I mean, once you get a rejection, you can just go live. Targeting, I mean, you can target 0.618, or this could be a wave. This is realistically a wave 3 run. So you can push it. I mean, there's a monthly 50 EMA in the area, so that could be an easy target, right? Or you can push it to 1.272. Stop loss 0.75. You gotta get yourself almost a 4% position once there's an actual rejection on a live entry, Or again, you can just place an alert, wait. So at this point, would already be on watch. You would just wait for deceleration, a proper rejection on that daily time frame, and then execute as a day trade. The hybrid style, right? That is what swing trading is. So at this point, you have a pretty good understanding of what swing trading looks like. I mean, it's just applying the strategies on the higher time frame, period. So with that said, that is it. That is it for the introduction to swing trading. You can see it's not much different than day trading. Just taking those strategies, applying them to the higher time frames. But the main difference is that it's a little bit slower, right? Price action takes a little bit longer to develop. So if you don't have enough time in your day to focus daily on trading, because day trading is, you need to put in time every single day, right? So if you don't have time every single day to put into trading, you can still make a serious return swing trading, which is, again, a little bit more of a part-time approach. So that is it for this lesson. In the next lesson, I'm going to talk a little bit more about the differences between swing trading and day trading. But at this point, I just want to say, seriously consider swing trading, specifically if you cannot commit fully to day trading. But in the next lesson, I'll talk a little bit more about that. So that is it for now. Hope you enjoyed this lesson, and I'll chat to you in the next one. Take care.